The Federal Reserve's interest rate circus. Why your wallet is the main attraction. Picture this. You're at a magic show. And the magician, let us call him Jerome Powell, keeps pulling the same rabbit out of the hat while the audience nervously checks their wallets. That's basically what the Federal Reserve did yesterday, held interest rates steady again, and shrugged at the economic chaos like a dad watching his kids argue over the last slice of pizza. The Fed's big move. No move at all. Rates are still parked between 4.25% and 4.5%. Where they've been since December, because apparently nobody, not even the Fed, knows what's coming next. Here's the deal. The Fed is stuck in a game of economic whack-a-mole. On one side, new tariffs are threatening to jack up prices on everything from cars to ketchup. On the other, businesses are sweating bullets. Consumers are hoarding cash like doomsday preppers. And the Fed's crystal ball is fogged up with uncertainty, as Powell put it. It's not at all clear what we should do. Comforting, right? So what does this mean for you? Well, if you've been waiting for mortgage rates to drop so you can finally buy that house, don't hold your breath. The average 30-year fixed rate is still hovering around 6.91%, which is better than last year as are you kidding me highs, but still enough to make your budget weep. Credit card rates stuck at a jaw-dropping 20% plus because banks are clinging to those juicy profits like a toddler with a lollipop, and if you're hoping for relief on car loans or student debt. The Fed's wait-and-see approach means you'll be waiting and paying a while longer. But here's the twist. The Fed might actually be right to sit this one out. The economy is like a Jenga tower right now, looks stable. But one wrong move could send the whole thing crashing. Jobs are still growing, and inflation is technically cooling, though tariffs could send it spiking again. Powell's strategy? We don't have to be in a hurry. Translation. Let us see if the economy survives the latest drama before we do anything drastic. Of course, there's a dark cloud in this silver lining. The Fed's biggest nightmare is stagflation, a fancy word for prices go up, jobs go down, and everyone has a terrible time. It's like the 1970s called, and they want their economic misery back. New trade policies could trigger it, leaving the Fed to choose between fighting inflation by keeping rates high or saving jobs by cutting them. Either way, someone loses, probably you. So, what's the takeaway? For now, the Fed is playing it safe, which means your loans stay expensive, your savings earn a decent 0.5% small win, and your grocery bill might soon include a trade policy surcharge. The best advice? Keep an eye on those economic headlines. Maybe lock in a CD rate while they're still good. And if you're feeling spicy, send Powell a meme about how indecisive he is. And hey, if you enjoyed this roller coaster of economic absurdity, do us a favor. Share it with that one friend who still thinks the Fed is just a fancy bird. Sanctuary. Because nothing says fun dinner conversation like explaining stagflation over tacos.